Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Wednesday, August the 21st, 2024. It remains in the hands of the market, so to speak, but it remains in the same framework that I have been presenting. And so I'm going to start on the NASDAQ. I'm on the hourly chart. Let's see if I can get this to move. Come on, keep going. There you go. Um, So, so the preferred right now is that we are rising in a minute degree five-wave pattern. And within that, we still are, I believe, coming close to finishing the minute wave three. Now, that's under the preferred. The alternate would argue that the four is yet and still in progress, and what we have coming down to this point is a minute A wave. And so this whole thing is a minute B wave, and this being A, B, and then we're working the five-wave structure to complete a C wave, which would then complete that internal minute B wave. And the market would then drop, and the market would drop pretty precipitously. As a trader, as a day trader, wherever it ends up here, we'd be looking for it to drop back down into this area. So that's pretty far. This is 17,351. We're closer to 20,000. So it's a lot of territory to cover, and it could go very quickly, and it could be extremely profitable. So I want to approach this from a trading standpoint, pure trading. And to be honest with you, I can't care, or we as traders should not care what is creating the situation. We can get our indicators from moving averages, from the price action, from the flows, from the capital flows. What could upset the capital flows? That's something different because there's a lot of factors that can go into that, volatility being the largest one. So what it does though is we have levels that could shift a narrative, a shift from risk on to risk off, and that then produces a trade for us as traders because the market is bound to jump into action, either buying and or selling. So right now it still remains kind of risk on. So as we sell into things here, it is quickly eaten up and the market continues to move higher at kind of a pace that you'd be like, well, gee, when are you guys going to be done? Why aren't we seeing the follow through to the downside? On an Elliott wave basis, I still believe we're still within it. So we're still within that fifth wave. We're in a minuet fifth wave of a minute third wave. And so we look and we work what we're going on in there. Now that's the hourly chart. And to really refine this, I bring it down to the 15-minute chart. 15-minute chart kind of suggests that within this sub-minuet wave 5, we are opening up in an expanding diagonal. It's expanding between 1, 2, 3. So in fact, what I believe we have is 1, 2, and 3, and 4, and A, B, and we're in the sea of 5. Well, this is where it gets very interesting because what that suggests is that one way or the other, we should have a little bit larger of a pullback. For example, if it is finishing the fifth wave of a minute third wave, that would be the preferred count that we're looking at right now, then still you're looking for a fourth wave decline, minute wave 4, which should find its support and ending point right in here. So you're looking initially, once we get up here, I think of, quickly we could have a return back to between 19,680 down towards 19,440. So we got a 400-point range off of wherever the high comes in that the market can come down into, play around. Before then, we would expect the market to return and move higher and move above wherever we finish this. And then again, just finish the next leg up, which on the preferred count would be, we come down in a minute wave 4, we go back up in a minute wave 5, and that minute wave 5 then completes. Now I'm just bringing it out here again. Come back out to the daily. It completes minute wave 5, completes the minor wave 5, which then completes the intermediate third wave. So we have our completion points coming in, and they produce a little bit larger fourth wave. So when we're done here, it should have a fourth wave coming back into here. When we're done there, it should have a fourth wave that's coming back into here or lower. And then we move up and we come back again, it's not necessarily going to be a fourth wave. It's likely going to be a very large A wave. I mean, it is a fourth wave, but it's going to be a cycle 4. So as we continue to build out to that, ultimately the biggest picture that we can present. So we're pretty far away from that cycle wave 3 top. We still have got quite a bit to go. Both directions. So we got corrections and we have the upside. So from a pure trading standpoint of view, we get up into this level tomorrow where the market decides, oh, that's enough. And we can put a 5, we can put a 5, and we stick a 3 up there. Well, then this is what we're going to be looking for. We're looking for a drop down into this area in a minute fourth wave. Then we get a minute fifth wave up. So let's leave it right there for right now. So right now we're looking for, where can this fifth wave come into play and finish? Well, here again, I believe that we have within side of it, inside of this fifth, a 1, a 2, a 3, a 4, 5. So I believe we're coming up into it. Now, where do we have our resistance? We continue to have it right there at 19,983, which we have visited once. More than likely, what we've got to factor in is that we're likely going to pop above 20,000. And then we're looking at 20,010, which is just popping right above it. And I think stops and some other things ought to be able to pop that even higher. But it's a fifth wave. So again, we start to put additional fibs in on a lower degree down into here to see maybe where we go down into a different level, and then eventually up to a peak. But right now I'd be looking into here. And again, that would be like a minute third wave. Taking a look, I'm going to move this back out again. Let's go to the 4-hour chart. Taking a look at the possibility that it's the B wave. So in other words, the alternate still sticks with, this is 3, and this is minute A, and we're finishing as a minute B wave. Whether we get up to here or here, it still could be a minute B wave. And then what would that suggest? Well, that's going to suggest that we come back down and we end up back here or lower, and I would say lower. So possibly down into here. That's under that count. Or now see, yeah, that would be, so we'd have A, B, and then 1, 2, 3, 4. We're finishing a 5, and we're going to put a C on top of it and the B. That turn lower should not find support here. At least not support to complete. It may find support there because this is still a break in the sand here. So this level, which is 19,688, I believe, still stands, and that if a break, I would expect that we'd get a little bit of increase in some selling. Now, depending on where and what the whole structure looked like, we'd be looking for it to bottom into this area right here. If it indeed is the beginning of that C wave down, I don't think this won't contain it at all. It should go busting through that and keep going until we get down towards here or lower. That would be the C wave. And then we put a minor 4 and we race back up yet again. Now, sticking with my preferred, and I know, again, as a trader, we're going to come into this. This is an A, and this is all not to be done yet. It's not even in the play. And we have A, B, and we're coming up to a fifth wave. Excuse me, under the preferred. It's a fourth wave here. The other one was the reverse. I showed you that one already, the B wave and coming down. Otherwise, we're finishing a minute wave 3. So the fourth wave would be expected to find the support down here, and it's a decent decline. So we can't get caught up in the number in terms of that we're trading 19,921. We're above. So, and that should not really influence me. I was saying, well, the market's going to drop 500 points. Yes, but it's still just a fourth wave. So I want to come from a purely trading standpoint. There will be some free falling. Yeah, those will be nice. That's where we're going to really collect some good money, because you're going to hang on, because the momentum is telling you. So there are different indicators and different levels that would be broken that will present us with a greater pressure to sell. So we have a lot of levels coming off that have been built up as we go up, but they're markers. And it's just like as they start to fail, it's just like the momentum gets stronger. The gamma goes from being positive to switching to being negative. So we could switch out of, oh, we're just more positive gamma. We could switch back to a negative gamma atmosphere. And then we will. It will be hard to find the bid. Right now, it's hard to find the offer. So they just boom, boom, boom. What's it going to take? But when it starts to go and things fall into place in terms of what the flows are showing us, then I believe it's going to happen. Now, to what degree and what count, that's what's going to be important. So what I'm discussing right now in terms of the trading aspect is whether this is a minute 3 or whether this is a minute wave B. We're still expecting the market to turn and head lower. Once it finishes this, and here is all of our gap area of where it could finish. A 3 or a B could finish up right in anywhere in these. So, and that really goes from 19,983 to 20,010 to 20,132 up to 20,300, almost 375-ish up into that area. That's the zones to finish the current move. So we're either almost right, could be there. And trust me, when it happens, the market, I think, will let us know. Now, granted, I could have gotten that picture right there when it dropped off. And that was a couple of days ago on the opening. I think it was yesterday, actually. Yeah, the 20th. Today's the 21st. Oh, so long ago. But that kind of goes, oh, it was rejection, but then look what happened. No, really it wasn't. But now it fits because of the triangle pattern. So we're okay in all of this. And an expanding triangle would suggest that we spike up into here somewhere and then flip and turn and come back down again. So it's this, we're going to be paying very close attention to the severity and the speed of the drop. And again, when I go over these levels, and again, this is just in the trade room for right now, and I'm sorry, but that's just the way I'm doing it. The levels that I give, it's like when they break, we also can judge the severity of it in terms of, is it just going to be like a sort of like drop quick, but it's going to recover, which we see a lot of. Or is it going to be one that's just going to be consistently pushed for a little while? And then we have several levels right below it that contain some size in terms of gamma, some size in terms of a position that sits there, or a collection of positions that sit there. So that's what I'm going to be paying attention to. That's from a pure trading standpoint. The why, who cares? Truly, who cares? Because when it happens, you want to be able to participate. And that's what my angle is, my talk is, and my focus is attempting to turn inside the trade room. Which again, I know guys are going to have to let me market this a little bit. That promo is still in gear. If you would like to attempt to try to day trade, or maybe you are day trading and you'd like to be in a little bit different atmosphere that moves you from the who, what, where, when, and why over to the flows, please give it a look at www.tradershelpingtraders.com, trade room tab, pull it open, bunch of information there, and choose. I'm offering a discounted price for the month, for your first month, whether it be now, because this promo will go through Labor Day, midnight Labor Day. All right, back to the market. Now, bringing it down out of here, all the way to the 15-minute chart, we can see that, yeah, we're kind of just looking like we're likely could be into that 5, or maybe, just maybe, it's only 3. 1, 2, 3, 4, 5. Okay, which is why we have that a little bit larger. Now, we will have all different levels up in here as the market continues to rally higher. Gamma levels, put calls, call walls, they all shift. They're shifting. So that's how traders, institutional and just traders, dealers, that's how we trade. You just go for the strike. You've got to move things seemingly out of the way. And when they get broken, well, you make another adjustment. So to keep trading is to keep trading. These levels will break and then shift and move to different things. My point there is by utilizing them, we get an idea of where the flows are coming from and how and what they're doing. And a lot of times I do that because I watch my watch list and plus the numbers and that I have. And like today, the reason why it got real strange in terms of trading, because we're seeing selling happening in different markets. And then the NASDAQ, it's like, okay, why are you so disjointed? And actually, all you needed to do was to look at what was actually physically trading. And then you have to mentally accept the weighting in the stocks that were trading, the weighting. And that's like heavy, medium, light, the weighting. So for me, we saw a lot of play in and out of Apple because they're making their adjustments, they're putting positions on, et cetera. So there's a lot of flow going into Apple. And it had then more control over that very short-term, near-term picture of what the future would do. So as a day trader, that affects it. That affects how you're going to trade. Maybe you're just going to stand aside because it's rather choppy. So that's kind of my point on saying I'm trying to approach the market from a pure trading standpoint and not really. I use Elliott for sure, but the Elliott has to become more flexible to the way that the capital is flowing, because what we're attempting to do is to make capital off of the capital flows. And so we can look at this and like this is wave 1 of 5, wave 2 of 5, A, B, C, 3 of 5. Where can we get to? Well, I think no, not that one. Let's try. Nope, that's why it's doing it. We're going to go over to here. And I got to do it from the right way. Here to here to here. And that's wrong. Stick with me one quick second while I get this right. There you go. All right, so 1, could. 3 could. For sure get us above 2000. We got 2004, 2010. That's our level. We got the doubling up here. And that is where C will equal A, and we're at a new high for the sequence. So that fits. But also we could pop and get up and towards that secondary. And that secondary now is developing around 20,100, 132. So we got just above 20,000, but then we have to where if we got enough energy, the market can get up to 20,100 to 135. And then we have that third zone. But the third zone, here, we're looking for the whole fifth. And so that has to be included in a really strong push. So inside of it, we're looking for 3. Then we get a 4, then we get a 5. So we might get all 3, obviously all 3 engaged before the thing finishes and turns. And because I'm on a 15-minute chart, I'm going to say that likely that could happen between, well, tomorrow's trading Friday. We could be done on Friday. And then we go into that other correction that I spoke about, to whether here or whether we go. And both are going to produce some really good trading. So we're going to be ready either way. And moving averages, let me go out to that daily because that's the one that's been kind of laggard-like. And it really still is. Look at this. Which keeps the B wave alive. I got to tell you, it keeps the B wave alive in the NASDAQ in terms of, no, it's not. The 4 is not complete. So this is the area we're going to come back to and then go again. So in terms of like, yep, those are our choices. Either it's going to come here, stop and go again, or it's going to come back down to here and go again. That's what we're looking at. So, and I'm telling you, the way that it's acting here on the daily, the market is more conclusive. It's like, well, yeah, but we could get here, but still likely end up back here versus here. Because of how I'm seeing these positions kind of be built up right now, to be honest with you. All right, so the 20 still is not above the 50. And we did a good zip up again today. We yep, sure got up there, and we're not doing nothing right now. We are up 15. Whoop-de-doo. All right, let's go over and take a look at the S&P. And this is getting long, but I'm hoping giving you a lot of information just about actually the trading part. All right, so daily chart, we'll just take a, okay. Daily chart, we're just going to take a look at the market here. For as we can see, our moving averages, they're not bad. The daily S&P is a little bit more conclusive that we could be reaching we should be reaching the 3. So again, that still argues that it's going to get above 21 before this whole thing is complete. Could it still be a B wave? I'm not going to say no, because there's the high, 57.21. What if it gets up to 5,700 and turns and pukes, and we end up back down here? Then it's an A, B, C. Or could this finish a 1, 2, 3, 4? It could be 3, and then we do a 4 and a 5. It can. And the intensity of the expected correction that we're looking for it in the next couple of days to begin, whether it's going to be from there to there, or whether it's going to be from there to there, or even here to there. You know, we got 57.57. That is where minor wave 5 would be 2.618 times the length of minor wave 1. Pretty well fits. And if that's the case, that's intermediate wave 3 that we're completing. And then so better that it's likely just minor 5. Intermediate wave 3, we do intermediate wave 4, we get an intermediate wave 5, and intermediate wave 5 does take us up here. That's out there. That's out there. But what my trading focus I want to keep on the S&P right now is the fact that we likely will. Going to finish this up, whether it's here, here, possibly even here. Come down in a 4, into here, go back up in a 5, and then come way down here. So that'll finish intermediate wave 3. Intermediate wave 4 should still likely come down to the price territory, the end of minor wave 4. Well, there it is. So I'm going to leave that right there. Let's go down and see how we're doing day to day. Going into the hourly chart, again, in minor wave 4 in place. So we're in a minor wave 5, and that would include new highs above 57.21. If we have minute 1 and 2 in place, we're in a minute wave 3, and in that we have minuet 1, 2, 3, and 4. We're in a minuet wave 5, and within that, coming down to the 15-minute chart, we're in 1, 2, 3, 4, and breaking into that 5th. Now here, a little bit different because of this. I prefer to put the 4 out to here and call this just a weird 4th wave pattern. Much of it kind of was overnight. So that gives us a lot of like just elongated chop. And then we open and boom, boom, boom. So if I kind of condense it, it's like an ABC up. So we have ABC down, ABC up, 5 down. And it probably doesn't even fit all together, but that is the way I'm kind of looking at it right now. And ABC 1, ABC 2, ABC 3, or we're still maybe going to do a little B. Or we get ABCs up, and that's still, if that's just A, that's just B, and then we get here, and that's 1, but is this 1, is this 2, and now we get a 3, and we spike a little bit to 56.65, reach that, put in a minute wave 3, come back down, possible. So again, and if we come up here and we start to come in, and all of this gets erased and we're dropping back just to 5,600, that's our break point to give us an indication that this minuet 5 of whatever it's going to be is complete. That's our first line in the sand is coming in at 55. I got to just do it this way. Boy, that would be easy, wouldn't it? 55.94. So 55.94, break below 55.94 should produce some different selling, and maybe, but our next support level is right below it, right here. And that would be if it is just that smaller, right? This is just a minute wave 3. We're going to do a minute wave 4. It'd be more like that. It should be bing, bing, bing. Not even like this. It should take a little bit of time and get us down. Very formed. I'd like to see it nice and clean. And get it down into here, put a 4 on that, and then that in a minute 4, we go up in a minute wave 5 to finish minor wave 5. And then we're looking for new highs. That's under the preferred, the way it's labeled. The alternate would suggest that we're finishing, once we get this 5 in and this 5 in, that it is going to be a minute B wave of minor wave 4. And we're going to go dropping in a C wave, and that C wave is going to take us back to this area. And then once we get down here, we can then turn again and run in a minor 5th wave. So we have still, from a trading point, instead of trying to figure out the who, what, where, when, and why is it doing this, it's like, just accept it. Don't panic. It's just a number. Just accept it. Follow the internal flows to see which one is going to be smoother, which is choppier. Like the NASDAQ's been choppier because of the internal breakdown of what's moving in one direction and what's going in the other direction. And when the higher weighted stocks in the NASDAQ and the S&P start to move diametrically opposed to one another, where one is kind of going up and the other one's working its way lower, particularly like Apple versus Microsoft versus NVIDIA versus Tesla, and you get 2 or 3 of them working in one way and 2 or 3 working in another way, it produces strained moves. Quick, because the volume is there. The volume has been okay in Apple. And when we're not okay and lighter volume in our futures market, we're going to move them a lot quicker. Or just spike and drop. Or spike lower and run back up. Either or. I do believe that's going to change, because I do believe that we will be more, everyone will be in accord in what they need to do. Hopefully. So here we go. That was the 4-hour chart, and just to kind of point out some where we are and what it goes and where we can come back to, even on an intermediate 4th wave drop. Now, if it's just, again, please understand me, if it's going to be a minute 4th wave, we're not going to get back to here. We would expect to not drop very far at all. We would expect to drop back to here. Okay, and that line, see, we're not that far below the whole break. That line is 55.83 down to 55.36. So it's just a 50-point range. But it's up. It should start from up here, above 56.35, likely above towards 56.65. That's where it should start. So we have over 100 points that we could give back and then rally again. And we'd be looking for it to be a nice clean ABC down. Then we're going to rally. That's the pure trade. Moving averages, did I go over them? I don't think so. Let me go out here. They're not bad. They're all still, but getting a little bit more mature. You can see that the 20's kind of roaming around inside trade. And the 50's kind of going like, okay, I'll follow just for a little bit. But it's still rising, and the 200 is still rising. But once they break, these will turn and go flat at first. And then that'll also help us determine, is it truly just going to end up right in here? If they stay flat, pretty likely. If they pick up steam, it's going to be because of the strength, the relative strength. So we'll be able to get our clues. All right, I'm not going to really go into extreme depth here again. But I'm trying to present it for the trade. So that's what we're going to be looking for tomorrow. And the next, let me just tell you what's coming tomorrow. Economic data wise, on Thursday, we have initial jobless claims, 8:30 a.m., 9:45 a.m. Eastern. We have the S&P Flash U.S. Services PMI and the S&P Flash U.S. Manufacturing PMI, both at 9:45 a.m., 10 a.m. existing home sales. So it could be a little bounce. Could be a little bounce either way. And that'll be fine. All right. Have a great evening. And the next update will be on Thursday, August the 22nd.